We are currently seeing the whole crypto market crash. With huge dips in the market, only the strongest of the projects will remain, and as a result, crypto unicorns might be going down with it. Luna was first, but now a $10 billion giant, Celsius, is facing insolvency and maybe even bankruptcy. This video is a must-watch if you or anyone you know has put any money in Celsius. For now, let's dive right in. What is Celsius? In the last few years, we've seen the rise of so-called centralized DeFi companies or centralized decentralized finance companies. They basically manage crypto on behalf of their investors. They take your money or crypto, promise you a fixed interest rate, and then put it on chain and use it in DeFi to earn a yield, which means a return for an investment over a set period of time. While they advertise their services like that of a bank, the service is almost more like a hedge fund or an asset manager, since these strategies have some risk involved and require supervision. Okay, but how do they actually make their money? Basically in two ways. Number one, by giving loans to institutions and individuals, and two, keeping whatever profits are left after running strategies on behalf of their customers. For example, if they advertise 5% returns on USDC deposits and then swap that USDC to make 20% on USD, they then keep that 15% extra that they made. And this is how Celsius did phenomenally well throughout 2020 and 2021, eventually reaching a valuation of $10 billion and more recently raising $400 million. Okay Adnan, what is the issue? Well, they kind of manage their funds like degenerates. I'll explain how, okay? So, the Luna collapse shook the industry and made waves in mainstream media and is maybe the biggest wealth destruction event in crypto ever. And Celsius was involved. Wait, if you want to know more about Terra Luna's collapse, I have the video right here in which I broke down exactly what happened. For now, let's get back. So, Luna promised 20% interest on USD-pegged stablecoins, making it a super popular product advertised as risk-free. But when markets began to shake, the mechanism to hold the token at $1 failed, leading to a death spiral and the failure of a $40 billion protocol. But as Luna collapsed, many speculated about big institutional players losing their shit on their holdings. And Celsius, who promised strong rates on stablecoins, was exposed to this collapse by holding up to $500 million in USD. It's their customers' hard-earned money that got lost. But they had a buffer. At least I hope that they did. For the Ethereum or ETH deposits, Celsius promised 6 to 8% in interest, with a lot of it likely earned from staking rewards on the proof-of-stake Ethereum beacon chain. The biggest issue with that is that the assets held on the Ethereum beacon chain are completely locked up and cannot be unstaked for now. But crypto protocol Lido solves this problem by creating a liquid derivative asset called Lido Staked ETH or STETH. While STETH is often traded as a 1:1 ratio, it's not pegged, meaning it doesn't have to be traded at a 1:1 ratio. But Celsius kind of counts on its STETH holding ratio at 1:1 because it needs to match its liabilities in its book. In a bull market, that worked out well. But with a liquidity crisis right now and a bear market, the STETH to ETH ratio, which is technically not a peg, began to slide. But Celsius has likely failed to isolate their risk. They might have taken USDC and held it in USD, Luna's stablecoin, or taken ETH and held it in STETH. So when all of crypto drops and all users want their funds back, all Celsius users feel the pinch. Well, because it's the same pool of money. But Celsius is facing a liquidity crisis, one in which prices that are spiraling downwards make it harder and harder to match the deposits with whatever they have on chain. So they had to do something extreme and shut down withdrawals. There are about 10 billion in customer assets in Celsius and only about 1.5 billion accounted for in Celsius's various wallets. So in terms of matching customer funds to liquid assets, there's a clear mismatch. And that loss of confidence inspires more and more people to withdraw, which causes more and more people to lose confidence. So if it's not liquid, where exactly is this money? Well, it's in a few places. Number 1, there's about 400 million staked on Ethereum's beacon chain. Number 2, there's a leverage trade of $400 million on Maker protocol. This trade, which is alarmingly close to its liquidation means a price at which Celsius will lose all of its money. It's important to note that these trades are often hunted by institutional trading desks. What this means is big firms will actively try to push prices down to get these big positions liquidated, then make money on these trades when the forced liquidation actually goes through. As for the rest of the money, who knows where it is? Maybe it's lent out on centralized exchanges and everything is kosher? Maybe it's not. So, how does Celsius solve this problem? Well, as I said, it's possible that they are totally solvent, which means that they have enough assets, but it's just not liquid. If that's the case, then they can try to negotiate with other institutions or whales to offload big non-liquid positions for a discount. If their assets don't match liabilities outright, then they're kind of screwed and will require either external funding, a loan, or maybe need to go through an acquisition. By the way, Nexo has already proposed to take over Celsius. Or they'll just go bankrupt, in which case all of their depositors are outright screwed. Markets are obviously shaken by the news, and these big institutions are becoming forced sellers. It's not a good sign, guys. As always, this invites regulation, oversight, legal actions from governments, institutions, and critics. It's a dark, dark day in crypto for sure. Be vigilant of centralized DeFi organizations, as they might be employing risky strategies that usually do not play well in a bear market. Please do subscribe if you found this video informative. For now, my name is Adnan. See you in my next video.